Good evening and welcome to this session of the live coaching classes conducted by the Institute of Chartered Accountants of India. And it's nice to see many of you here, like Aisha is here, Darshan, Bhumika, Rajni is here, Nilesh ji, welcome, Rushita and Diksha. All of you and others who have put their name here also, welcome and nice to be here. Today we are going to talk about a non-corporate law topic. The Negotiable Instruments Act 1881. So 1881, yeah. Pretty old, huh? Yeah, welcome, Manav. Pretty old and pre-independence. Similar to the Indian Contract Act, that I'm sure you studied, and the Sale of Goods Act, maybe, whatever. So the Indian Penal Code for that matter. And so the Negotiable Instruments Act 1881. So very, very interesting law. The relevance of this law also can be questioned in the light of today's technology. See, this law was prevalent, as you can see, pre-independence, you can say colonial times. Even the British, today may not understand. But a few of these topics are very relevant and interesting. By and large, you might find bulk of the topic has lost its relevance. So, we need not get into too much details is what I would humbly suggest to you. See, if you read this topic, you will get a little confused. A little bit. I will do my best to make it easy for you. But if you still want to get confused, choice is yours. Nobody can prevent you from becoming confused. But I can give you clarity. So follow me and you will get clarity from the exam perspective more than enough. But if you're getting too confused in all that, it will become problem. Because some of these instruments, their relevance is now questionable. Right? Including check. Today, checks are slowly going out, right? So, before we go there, let us see what is this negotiable instrument. Instrument, okay? Instrument means piece of paper, instrument, which communicates right to receive money or goods, or to pay money or goods, deliver goods. Some right is communicated, it's an instrument. Okay. That is why sometimes contracts in written form are called instruments. So any paper that communicates a right to pay, to receive money and an obligation to pay money, or in some cases, in negotiable instruments, it will be only money. But there are other instruments where we can also have, shall we say, goods. Like for example, share transfer form. Now, the point is, negotiable instruments are those instruments where the right to receive money can be transferred. I have the right to receive money from A. Now, without consulting A, without telling A, I can transfer this right to somebody. So, A has given me a piece of paper that says, I owe you money, Mr. Srikanth. Thank you. Now, that piece of paper is a negotiable instrument. And that piece of paper, I can give it to somebody else. And later on, that somebody else can go and collect money from A. A has to pay. Are you able to understand? When this system is there, it is called negotiable instrument. You might ask, don't you think that's a very great benefit in commercial transactions? Think about it. But later on, as I'm giving you examples, you will understand better. In commerce, in trade, we buy and sell. So when I sell to you, you become my debtor. Now you don't pay me immediately. So I may take an instrument from you, whatever. And that instrument, I will give it to somebody else and take money. And so on. So that somebody else may give it to somebody else. And so it becomes negotiable. Negotiable means transferred. Now, later on, you're going to see negotiability could be in many ways. Transfer by mere transfer of possession, or transfer by endorsement and transfer of possession. Either way, whoever is in possession of the instrument only can claim. So, in negotiable instruments, possession becomes very important. We'll see that. There are three types of negotiable instruments: promissory note, bill of exchange, check. These are the three categories of negotiable instruments. We will be seeing systematically each one of them. What is a promissory note? What is a bill of exchange? What is a check? And all we'll see. Basically, negotiable instrument is payable to order when it is expressed to be so payable. When it is expressed to be payable to a special person and does not contain words prohibiting its transfer. Okay. So, when a negotiable instrument is payable and it says payable to Srikanth or order, it is expressed as payable to Srikanth or order. That means what? Basically, it is payable to me, but I can decide. I can turn that instrument, and on the back, I can write your name and sign. Now it is becoming payable to you. You are called order. I am ordering the person who owes me money to pay to you. So that is called payable to order. In the second case, it is expressed to be payable to me and does not contain words prohibiting its transfer. So I can transfer. I am the person to whom it is to be paid. I am the payee, but I can transfer. I can say, I can write your name and sign. Then it is transferred by endorsement and delivery. Okay. These words will be explained to you still, since initially we are giving this word. Now, imagine when it is payable to bearer, an instrument is payable to bearer when it is expressed to be so payable. Or think of that is the most important. Bearer instrument means pay rupees 50,000 to bearer. Now, bearer means anybody. Bearer means anybody who gets possession of the instrument is a bearer. Okay. When the last endorsement, when the only or last endorsement means signing on the instrument. See, what we normally do is we turn the instrument and we write the name of the person to whom it is to be paid and we sign. Suppose instead of mentioning any name, the instrument is payable to me. I turn it around and I endorse it. How do I endorse it? Without giving any name. Blank. There is an endorsement in blank. That means I am not mentioning the payee's name and I am signing. Now that instrument has become bearer. Why? Because it was payable to me, but I have signed and said, I don't want the payment. I have not mentioned anybody's name, which means suppose you come across that instrument, what you should do? Fill up your name, claim the money. That is called payable to bearer. But bearer instruments are very dangerous because identity of the payee need not be disclosed. Therefore, later on we'll be seeing that in India, you can't have a promissory note payable to bearer or a bill of exchange payable to bearer. Okay? Payable to bearer not possible. Prohibited. We'll see that. So, yeah. A lot of new people have joined. Vishwanath Reddy, Mohit, okay, Sashank, Keshav Thakur. Yeah. We'll come to that currency note. I'll come to it. Don't be in a hurry, Keshavji. I'll come to the currency note. Yes, the currency notes are negotiable instruments payable to bearer. I'll come to it. Good point. Very good knowledge. But don't worry. In a short while, I'll come to it. So, essential characteristic of negotiable instrument. It is in writing. Oral promise cannot be a negotiable instrument. Instrument, I told you, instrument means piece of paper on which something is written. If that paper with writing is not there, it is not an instrument, negotiable instrument. It should be signed. It is freely transferable from one person to another. No, you cannot restrict. And the holder's title is free from defect. That is, if I am the holder, holder means the person who is last in possession. Whoever has that, when the instrument is presented for payment, whoever is having it is called holder. Every person to whom it has come now, it is called a holder. Holder, literally I am holding it now. You are giving it to me, I am a holder. Holder's title is free from defects, but this is where the complications will start. The word holder is there, then we will be seeing you can understand, Nilesh, just relax and listen. You joined a little earlier, na? You joined at 5:59 itself, na? No problem. I join now, able to, what is that? Understand from now or not. You join, if you understand. Even people who are there from the beginning may not understand. You just concentrate and listen. So one thing you understood, negotiable instrument relates to payment of money, promises to pay money. One person promises to pay money to another. That person to whom it is payable can now transfer it. So the right to receive money can be transferred, freely transferred. And whoever is holding it gets it free from defects. So this will be very interesting concept, right? Can be transferred any number of times. Every negotiable instrument must contain an unconditional promise or order to pay. And money only. See, so negotiable instruments deal only with money. The sum payable, the time of payment, the payee must be certain. The instrument should be delivered. Means the payee should have possession of the instrument. Every holder should have possession of the instrument. Without actually possessing the instrument, you have no right in it. Right? So delivery and possession are very, very important. You might have studied delivery and possession in Sale of Goods Act. Okay, we'll talk about that also. There are certain presumptions with respect to negotiable instruments. What we will do, we will skip it for the time being. I will go to definition of the three types of instruments. You understand that? Then we will come to the conditions. Then we will go to other topics. There's a reason why I'm doing this. Because the minute if I get into this now, you will get confused. Because some knowledge is to be given to you before we can give you the presumptions. Right? This is my humble view. But institute material, it is given in this order and I have covered it like this. But my suggestion, you first understand what these instruments are. We already said there are three types of instruments. Promissory note, bill of exchange, check. First we are seeing promissory note. Promissory note is an instrument in writing. So it should be in writing. Not being a bank note or a currency note. As my friend Keshav Thakur was saying, bank notes or currency notes are exempted. Though they are promissory notes. That's what Keshav Thakur was saying. Sir, can we say currency notes are instruments which is payable to bearer? Yes. For a special reason in our country, banknotes and currency notes can be printed only by the Reserve Bank of India or by the Government of India. So, other than them, nobody can make a bearer instrument, bearer promissory note. No. So, a promissory note is an instrument in writing containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order of a certain person or the bearer of the instrument. So the definition says bearer because once upon a time during British period, when the act was passed, there was no problem in bearer instrument. Okay, bearer means if I'm having it in my pocket and I present it to you, I get the money. Bearer. But post-independence and post, the problem of black money and all that became very difficult to control bearer instruments. So they prohibited bearer. And they said, a promissory note cannot be made payable to the bearer. Section 31 of the RBI Act. Only the Reserve Bank or the central government can make or issue a promissory note payable to bearer. See the 500 rupee note that I have displayed there. If you look at it a little closer, somewhere in the middle, between little after Gandhiji, there is the word specimen. Am I correct? And thereafter there is some letters are there. If you read it carefully, both in Hindi and in English, you will find it contains a promise. I promise to pay the bearer a sum of rupees 500. That's what it will say. Same in Hindi also. So, and it is signed by no less than the Governor of the Reserve Bank of India. So basically, though you are saying I'm having a 500 rupee note, it is not a 500 rupee note. It is a promise to pay 500 rupees. Who has given that promise? The Reserve Bank of India, RBI has given. As against that, the 1 rupee note. I don't know if how many of you have the 1 rupee note. This is the 1 rupee note that is right now on my table. I can see that 1 rupee note. This 1 rupee note is not a promissory note. It is a currency note. It is a currency note. Currency notes are issued by the Government of India. Whereas the above 1 rupee note is Government of India, now it is not printed. Coins are also minted by the Government of India. But other than that, all rupee notes are basically promissory notes. But the promissory notes, the promise is made by no less than the Governor of the Reserve Bank of India, which means RBI Governor is linked. So is it safe? I think so. Am I correct? So this promise is given by the President of the Indian Republic, yeah, indirectly. So you can be assured that you will get your 500 rupees. Actually, that's a big subject itself in economics, monetary economics, where maybe in finance you'll study it, where they'll talk about, see, this 500 rupee note is a promise, but that promise should be backed by gold. In those days, there was something called the gold standard. Then later on, the American government, post-World War II, they removed the gold standard. In other words, if a country wanted to print currency note, equivalent value in gold they should have. Only then they can print. That was done away with and all that. So that's a big story. You can read about it, but not relevant for you. Point is, so what you should understand from this topic, as Keshav Thakur rightly said, bearer instrument means payable to anybody who is holding. See, a holder is not a bearer. How to put it? Bearer means anybody who is in possession is a bearer. So holder is also a bearer, but holder is more than that. The holder, as understood by this law, some more qualities are needed for holder. We will see that. But he should be a bearer in the sense that he should be in possession of the instrument. Bearer, instead of confusing with who is bearer equal to holder, Nilesh, you understand this way. Bearer is anybody who is in possession of the instrument. But to become a holder, his name should be entered in the instrument. His name should be entered in the instrument as entitled to the proceeds. Then only he'll become holder. Otherwise, he'll be mere bearer. You cannot make a promissory note payable to bearer. You already saw that. It is prohibited. So, holder means his name will also be there. That is why, what do we say? It should be a promise to pay a certain sum of money only to the order of a certain person. So, bearer is a name may not be mentioned. Even if my name is not mentioned there, if I am in possession, I am a bearer. But I will not be a holder. I will not be a holder unless my name is mentioned there. In some way, either the original person who made it should enter my name there. I will be the payee. Or else, the payee should turn the instrument and on the reverse side, he has to write my name and sign and give it to me. Then I will become holder. Okay. Don't confuse. Please do not use English. No. A holder is a very technical term in this subject. So listen to me. Unless you know the subject, don't presume anything. Just wait. One thing I'll clarify. Anybody who has possession of the instrument is a bearer. But he may not be a holder. To become a holder, his name has to be mentioned. He should be entitled in his own name to receive the proceeds, to receive the money. Either as a payee. See, in this specimen, you can see 3 months after date. So the period is certain. The period is certain. After date means what? The date mentioned in the instrument. What is that? April 10, 2021. So 3 months after date. I promise to pay. Who is promising? The man who has signed it. Can you see that? When Mr. Ram has signed this instrument, that gentleman says, I promise to pay to Sri Ramesh. So Sri Ramesh, whose name is mentioned here, is a holder. Once Ram signs and gives it to Ramesh, he becomes a holder, obviously a bearer also. So Nilesh, have you understood? To become holder, your name should be in that instrument. Got it? Otherwise, you will be a bearer, but not a holder. Right? You will be a bearer. For example, this instrument, if you are receiving it without Ramesh's sign anywhere, and you are keeping it, you are a bearer, but you can't get one pie for it. Why? Because you are not a holder. Your name is not mentioned there. Suppose Ramesh has reversed, see, always the endorsement, the transfer of the right to receive money. Endorsement means transferring the right to receive money on an instrument. There is a right to receive money on this instrument. Now, Ramesh is having a right to receive 10,000 rupees from Ram 3 months from April 10th. Right? That right can be transferred by Ramesh by endorsing. That is called endorsement. How to do that? You turn this page. Imagine, I am displaying it on the screen. Imagine it's a piece of paper. On the reverse side, never say back side. Back side is a different thing. In biology, it's a difference. The back side is different. Don't use the word back side. Always use the word reverse. On the reverse side. On the reverse side, Ramesh will do what? Sign. And then write Nilesh Kapoor. Signed Ramesh. Then now Nilesh Kapoor becomes entitled. Now you are a holder. And once the instrument comes to your possession, you are the bearer. So don't confuse holding the thing and all, don't tell. See, that's confusing. Don't think like that. Bearer itself is enough. You're holding it, bearer. But your name should be mentioned in it. Now you want to transfer it to, let us say, Keshav Thakur. Then what you will do? Pay Keshav Thakur. Sign. You sign Nilesh Kapoor. Now Keshav Thakur becomes the holder. Are you able to understand? This is how it keeps going. And see, after you sign, after Nilesh Kapoor signs and pay Keshav Thakur, Nilesh Kapoor, you shouldn't hold that instrument in your pocket. It should be given to Keshav Thakur. So, delivery of possession is very, very important. This is what we saw. Characteristic. Possession is very, very important. Okay. If you don't possess the instrument, if you are not in possession, then you are out. So, this is how it is. Got it? Now, the person who makes the promise to pay is called maker. Promissory note may, he is called maker. He is the debtor and must sign the instrument. See, day before, about say 15, 20 days ago, one gentleman came to me. He's my good friend. I like him, etc., etc. He said, Shrikant, I need some money very urgently. He was also sympathetic to his needs. So I said, I'll give you money. But how to have some record for it now? So I asked him to sign a promissory note. So what, he has borrowed money from me now. So he's the debtor now. So he will sign. Whatever some terms were arrived at by between me and him. He said on such and such a date, I promise to pay Shrikant a sum of rupees 2 lakh, whatever. Sometimes even interest can be agreed upon together with interest and so on and so on. So he is the maker. Am I correct? I am the payee to whom the amount on the note is payable. So in my case, I'm only keeping it as collateral security. So I put it in my drawer, safety locker. I keep it locked. 2 months later, 3 months later, he comes, gives me the money. I take out the promissory note, tear it and give it to him. Or he takes it. I cancel it. He takes it. Enjoy. After that, it is up to him to keep it safely. It is up to him. Once you have repaid the money, the promissory note should be returned back. This is, friends, one more thing. Some of you might, after your intermediate or even now, you might be doing your articleship. In which case, you during March or April, you will be going for bank audits. When you go for bank audit, one of the things you will do is security verification for debts. When the bank would have lent money now, remember, so let us say there is a CC account or a term loan or whatever. For the amount of loan given by the bank now, there would be a DPN, demand promissory note. Demand promissory note. Don't worry. Demand means whenever I want, I can come and ask you for the money. See, this is up to for a time now. Whereas the bank will take demand promissory note. But obviously, there will be another contract by which they will give you EMI and all. So long as you are paying the EMI correctly, so long as you are paying the interest correctly on the CC, no problem. But the minute you don't pay, that promissory note is the prima facie security. Any document given as a some sort of a collateral. Suppose this guy's house property is also available with me as a security. That is called collateral. The primary security is the DPN. This is very important. In bank audits, you have to be very careful. Whenever you go for verification, first thing you should do, even if your partner or manager is not telling you, if you have been entrusted with that branch, first, sir, give me DPN register. And then see whether all the DPNs are active. Like that. So that's a very, very important point. So this has some relevance to you. You know why? We'll be seeing later on. You don't know about it. There is a law called Limitation Act. I don't know if you know about it. In Contract Act, you might have studied. There is something called Limitation Act. See, Ramesh is promising to pay Ram 10,000 3 months after April 10. Now he doesn't pay. Now what can Ram do? He can file a suit now. Within what time he has to file a suit? See, the money is due on, April 10, let us say, 3 months. That means 9 May, 9 June, 9 July. So by 9th July, the amount becomes payable. 3rd month will get over, 9th, midnight, 9th May, you have to pay me. After that, it is overdue. So I'm waiting. Of course, you will be seeing later on that there is a grace period. 3 days grace is also given. Chalo, after that, you have to come and pay me. 3 days grace, you have got to pay me. Whatever it is, you are not paid. Within what time should I file the suit? Within 3 years from the date mentioned in the note. If I don't do it, that instrument becomes time barred. So you have to be very careful. When you're checking the DPNs, you have to see what is the date. So if the 3 years is getting nearer, you should inform the bank. Please get it renewed. or if it is already over, gone. Because now, if that fellow refuses to send DPN, you cannot do anything. And if you want to file a suit, how? Because the minute you go to the court and you file a recovery money suit, first thing the lawyer will ask you is, show me the DPN, whether it's live. Only then that becomes the basis for my plaint. Okay. So just this is a small legal point, but you need to understand it. So simple. The debtor is the maker. He makes the promissory note, signs it, gives it to the creditor who is the payee. The relationship between maker and payee is debtor-creditor. Payee would have supplied goods or services, whatever. Okay. And or it could even be loan. In my example, I gave you, the payee, that is myself, creditor, has given a loan to the debtor. That also is there. Okay. Whatever. Okay. So, now, essential characteristics of a promissory note should be in writing. Oral promise to pay is not a promissory note. And there must be an express promise to pay. Mere acknowledgement of debt is insufficient. The promise should be definite and unconditional. The word unconditional is used in the definition. An unconditional undertaking. Unconditional. There should be no conditions. If this happens, I will do no contingency. Okay. But you can put certain condition which normally is bound to happen. Okay. But you cannot put something which is contingent. That is, may or may not happen. No. A promissory note must be signed by the maker. Otherwise, it is incomplete and ineffective. Promise to pay money only. Right? Promise to pay money only. Promise to pay a certain sum. Promise to pay a certain sum. You cannot say, such amounts as may be due from time to time. No. 5 lakh means 5 lakhs. Okay. Together with interest at 12%, you can say, no problem. Because interest at 12% can be calculated. But the basic amount 5 lakhs should be certain. And money only. You cannot say, I promise to pay Mr. Sham 200 rupees and 2 goats. No, that is not a promissory note. Because only money. All this you will see in the exam. There's a popular question. You'll see that. Yeah, they will ask you whether this is a promissory note. Maker and payee must be certain. We already know that promissory note cannot be made payable to bearer. Sorry, in India, not allowed. Not under the Negotiable Instruments Act. Under Section 31 of the RBI Act, only the Government of India is entitled to print notes, or the Reserve Bank of India. Of course, as a small, if you want to print notes, you know what is the consequence. A promissory note must be properly stamped in accordance with the provisions of the Indian Stamp Act. See, stamp duty payable on promissory note is a central subject. It is governed by the Central Act. See, the stamp duty is a kind of a duty, or it's an amount payable to the government for providing courts and for providing protection for your contracts and property. See, you and I are entering into a contract now. Tomorrow there's a dispute. Now the government is willing to adjudicate. See, I don't pay, I borrow from you and I don't pay. You come and ask me for the money, I say, go man, I won't pay you, go. So you get angry. What can you do? You can go to court. Who is running the court? The government is running the court. There's an expense. So all that has to be covered now. For that, whenever you register a document, property, you have to pay stamp duty. Whenever you transfer a share, you have to pay stamp duty. All the stamp duty is governed by the stamp law. In India, we have 2 types of stamp duty. One is state level, the other is central. For example, when you register an immovable property in a state, the state law only will apply for Stamp Act. Your local Maharashtra Stamp Act will apply, okay, or Kerala Stamp Act will apply. Whereas for negotiable instruments, it is a central act which decides. Don't worry about the stamp duty rates. Whatever may be the stamp duty payable, it has to be affixed. You can see here, I put stamp signed. There should be a stamp, and on that stamp only he will sign. I'm sure you've seen these stamps. They are called revenue stamps that are affixed and signed. Even when you make a payment in cash above 5,000 rupees, you have to affix a revenue stamp. Why? I'll tell you that also and then move on. If the stamp is not affixed, suppose you are paying 5,000 rupees, more than 5,000 rupees by cash. then if the stamp is not affixed tomorrow in the court, when you're filing some evidence or whatever, this will not be allowed as an evidence because it is not stamped. Okay, you have to prove it that you actually paid. Whereas if the stamp is there and he has signed it, it will be admitted as evidence. Is the difference. Again, don't use words like owner and all. Don't bring new words here. Instead of using the word owner, Mr. Mayur Gupta, would you like to use the word person entitled to receive the payment? I know it's a little lengthy and it's easy for you to say owner. As far as promissory notes are concerned, there is no owner, sir. It's not as if I'm going to keep it forever and ever. It is just a right. It is nothing. So the word owner is too permanent. Don't use that. Rather, you say bearer means person having possession. Holder means, listen to me, person entitled to receive the payment. That way, if you understand, it will be great. So this guy, this guy Ramesh is a holder. He is a bearer also because he will have possession. He will be a bearer. Since he is entitled to receive the money because his name is mentioned there, he is a holder. Later on, if Ramesh is endorsing it to say Nilesh Kapoor, then Nilesh Kapoor will become holder because he is entitled to receive the payment. So if you want to use the word owner for Ramesh, I am not comfortable with that terminology. I leave it to you. I am not, because such a word we will never use in connection with negotiable instruments. There is nothing called owner, boss. What is who is owner? You are going to have it, you want to transfer, give it to somebody else. There is no owner here. So kindly understand. Entitled to receive payment, use nothing. Whoever is entitled to receive payment, whose name is mentioned in the instrument, will be holder. If not, bearer. You are only keeping it. Suppose it is a blankly endorsed. No problem. If it is an instrument that has been endorsed in blank, if the last endorsement is in blank, then it is a bearer instrument. Even then, my dear Mr. Mayurji, you have to write your name there. Only then you will become holder. If you want to take this instrument to Mr. Ramesh and claim payment, last man signed is Keshav Thakur. Pay, he just put nothing. Blank, he signs Keshav Thakur. Now, you have got possession, now you are a bearer. Now, if you want to become holder, you have to write your name there. Pay Mayur Gupta. Then only you will become holder. This is my humble view. Because unless you understand this, later on when we come to slightly more advanced level in this topic, you will get confused. Okay. Sorry if I am explaining too much, but I am trying to be clear so that nobody should go with any doubt. Because this is definitely a confusing topic. Don't think it is easy. I am trying my best to make it simple and also clear. No need for sorry. There's no sorry. We already saw that stamping. Now, look at these wordings. I promise to pay B or order rupees 500. Very good. I acknowledge myself to be indebted to B in rupees 1,000 to be paid on demand for value received. So the second item is very long-winded, but it is a promissory. It's a very old language. Now, I acknowledge myself to be indebted to Mr. B in rupees 1,000. To be in rupees 1,000 means for rupees 1,000. It's a very old world English. In rupees 1,000 means for rupees 1,000. To be paid on demand for value received. I have not told you at all, no? Do you know who is the author of the Negotiable Instruments Act? Obviously not an Indian. It is pre-independence. It was drafted by a gentleman called Lord Mansfield. It was drafted by a gentleman called Lord Mansfield. Mansfield was a Britisher who traveled the length and breadth of this, not India, but the coastal, the Malabar coast and this Coromandel coast and the Malabar coast. And he was, and then he also went to the Gulf, to the Persian Gulf and the Arabian Gulf, where he visited ports like Dubai, Muscat, Doha, where there were seaside ports, where trade was going on. Even the African goods, ivory from Africa, all used to come there for sale. So the trading was very powerful there. And especially from the Malabar coast, from Kochi, from Surat, people used to go and come. So all this became very powerful. So there was a need for controlling this. Mansfield went and studied how the merchants were actually dealing. He studied the indigenous system of monetary transactions, and then he codified it. And that code is what we now call Negotiable Instruments Act. Mansfield. It is told that Mansfield used to sit in coffee shops, drinking Turkish coffee with Persian and Arabian merchants. And in India, again, he used to visit Bombay, he used to visit Kochi, and he used to talk to the people, the Jewish merchants, everybody who came and went. And he understood how they did, he documented it and made the Negotiable Instruments Act. Just for information. So the language used will be a very old English as spoken by Mansfield. So many of the examples that are given in your material are taken directly from the Negotiable Instruments Act. They are direct illustrations given by Mansfield in the Act. So that's why the language will be little thing. And also on the values, will be very small. You'll be surprised. 100 rupees, 500 rupees and all. Imagine, we're talking about 1800s. Okay. When 1 rupee was equal to 1 pound. And it was in silver, pure silver. Right. So 1 rupee was equal to 1 pound. And that was that time. Chalo. Now, Mr. B, I owe you rupees 1000. Is this a promissory note? No. It is only an acknowledgement of debt. I owe you now. But he is not saying I will pay you. There is no unconditional undertaking. In the earlier two, there is an unconditional undertaking. I promise to pay. I acknowledge myself to be indebted to be in rupees to be paid on demand for value received. So there should be an unconditional undertaking to pay money only to the order of a certain person, a certain sum of money. Here there is not a problem. There is a certain sum of money and a certain person, but there is no unconditional undertaking to pay. Next one. I promise to pay B rupees 500 and all other sums which shall be due to him. No, it should be a certain sum of money. There should be no doubt about it. Of course, you can say rupees 500 together with interest at 10%. No problem. Because I can calculate interest at 10%. I promise to pay B rupees 500. First deducting thereof any money which he may owe me. No, we don't know how much he owes you. Sorry, sir. I promise to pay B rupees 500 7 days after marriage with C. Now, this is something which cannot be 100% sure. Yeah. Whether he will marry or not, we do not know. So this is contingent. If he marries, I promise. If he does not marry, I won't. So this is not a promissory note. Okay. This is no more than an acknowledgement of debt. In case B marries C, he will get $500. But he cannot sue. One more thing, B cannot transfer this right. Unless it is a promissory note, it is not negotiable. You understand? Only a promissory note which satisfies the definition becomes a negotiable act. F is extremely contingent. Extremely contingent. Absolutely correct. If he marries, then I will do. He may not marry. C may not marry him. Both may die. Anything can happen. So, I promise to pay B rupees 500 on D's death, provided D pays me enough money to pay that sum. What nonsense here. So this again is contingent. No? I promise to pay B rupees 500 and to deliver him my black horse. So it should be an unconditional undertaking to pay a certain sum of money and money only. There should not be any other consideration other than money. So all these are characters. If you read the definition of promissory note, you will understand all this. Unconditional undertaking. See, if the instrument should be unconditional, no. The instrument should contain an unconditional undertaking. See, unfortunately, English becomes important here. And I'm going to be very puristic about your wordings. The instrument, no instrument can be conditional, unconditional. The instrument will contain an unconditional undertaking. It should have an unconditional undertaking. Okay? Yeah. If you have understood it correct, I'm happy. Unconditional should not, there should be no conditions. Okay, moving on. Seen that. So C, D, E, F, G, H are all promissory notes. Now we move on to the next type of negotiable instrument, which is called bill of exchange. Now, my dear friends, the relationship between the maker and the payee is slightly different here. And the purpose for which we make bills of exchange is different. Let us look at the definition and see the difference first. Bill of exchange is an instrument in writing, got it, containing an unconditional order signed by the maker, directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Straight away, by reading this, you can see that there are three parties. Am I correct? There are three parties. Let's see that. The drawer, the drawee. So the drawer is the maker. The drawee is the person directed by the drawer to pay. So he is called drawee. I am drawing the bill. Drawing the bill means preparing the bill. Don't think draw means artwork and all. No. Drawing the bill means to prepare the bill. So I am the drawer. I prepare the bill and I sign it. And I am directing the drawee to pay. Not to me, but to another person. That person is the payee. How can this happen? Simple, sir. You are my supplier. I am the buyer. Now, you are telling, I am the supplier. You are my buyer. You are my debtor. Now, you owe me money, na? Now, I am telling, Baba, don't pay me. Pay him. Kyo? Because anyway, I have to pay him money, ma. So, instead of me paying, you pay. So, whenever he comes and asks you, pay him money. So, I send you a letter or I send you a document which says, unconditionally directing you to pay to another person. Why I will ask you to pay to him? Because I owe him money. So the relationship is drawer is a debtor, a creditor. Drawee is the debtor. Payee is the creditor of the drawer. He is the ultimate creditor. Drawer is one level creditor. Drawee has to pay money to him. The payee is the drawer's creditor. So the drawer says, hello, brother, you don't pay me, you pay him, or to his order. Okay, so bill of exchange must be in writing. It must contain an unconditional order to pay. Order is also direction. Direction, order to pay. The order to pay must be definite and unconditional. Same thing. And the drawer must sign the instrument. The drawer, drawee, and payee must be certain. All these three parties may not necessarily be three different persons. For example, I can draw on you, make it payable to me. Nothing wrong. In which case, what will happen? It will become a promissory note. Are you able to understand? I draw it on you and say you pay to me. Now, that is called inchoate instrument. We will be seeing it later on. It's called an ambiguous instrument. It's called an ambiguous instrument where you can choose to do whatever you want with it. You can make it a promissory note or you can make it a bill of. See, if you want it to be a bill of exchange, you will keep transferring it. Finally, I'm getting it. It's up to me. Okay. The sum must be certain. The order must be to pay money only. And it must be stamped. All this we have seen. Again, you cannot issue bearer bill of exchange. 31 of the RB Act. So, bill of exchange cannot be bearer. Exception is there. We are going to see that. One type of bill of exchange can be bearer. But other than that, no other bill of exchange can be bearer. Okay. Bhavya, I have not seen your question, ma. 1 second. Bhavya Aurora. Aurora. No, ma. Have you this comment is visible. Sir, are my questions visible? Is visible. But question has not come to me, G. Bhavya Aurora, no. Very bad. So kindly send the question again. We will definitely see. Sir, can we say drawer sometimes will be the payee? Again, if the drawer becomes the payee, it becomes what? Promissory note, na? The drawee will now become the promisor. Okay. I will become the promisee and I will then, it can be. Nothing wrong. Or I can draw on myself. But see, I draw on myself means what? I promise to, I myself direct myself to pay. So whatever that foolishness is, finally who has to pay? I have to pay. It's a promissory note. Suppose I make you the payee, it's a promissory, basically a promissory note. Got it? So we'll see that also a little later, where I might draw a bill in a fictitious name on myself. Like that, all cases are there. Whatever it is, I will become liable on it. That's all. As simple as that. Why are we confusing with this bearer? Okay, bearer is a person who has custody, physical custody. Can you add that one humble word there? Because custody can be, what is that, constructive also. So custody means physical custody. You have physical custody. Okay. You are using one new word, custody. Why are you worried? Possession is good enough word, na? You are only using custody for another word which is called possession. Why are you uncomfortable with possession? I'm having the piece of paper in my hand, I'm a bearer. In my name is mentioned in it, I'm a holder. How difficult is it to wrap our minds around this thought? If I'm having physical possession of the instrument, I'm a bearer. In India, bearer not allowed. Okay, so if I want to make a promissory note, the name of the payee should be mentioned. Or else that payee should endorse it in favor of other people. Whoever's name is mentioned is the holder. Bearer and holder. But see, it cannot be paid only to bearer. It should be paid to somebody. Okay, that's why please do not confuse. Especially promissory note cannot be made payable to bearer. But ultimately, whoever is having possession is the bearer, but he will also be the holder. Minimum, you should be a holder. Only then you are entitled to the proceeds of the instrument. Merely if you are a bearer, without your name being mentioned there, that's all you can do. Nothing else you can do with that instrument. Unless it is endorsed in blank and nobody's name is mentioned and you are in possession. Then, even then, my dear friend, how many times you ask me, I will keep telling this. You have to write your name. Only then you are entitled to the proceeds of the instrument. Only then you will become holder. Okay. So, from now on, for the purpose of this law, bearer is becoming unnecessary. Don't waste your time on bearer. The only time bearer will be relevant would be when we talk about checks. Only time bearer will be relevant will be when we talk about checks. For promissory note and bill of exchange, don't listen to me. For promissory note and bill of exchange, don't bother about bearer. Talk only about holder. Talk only about holder. Holder is a person who is in possession, who is entitled to have possession, whose name is mentioned as one person entitled to receive payment on the bill or promissory note. Such a person only we should talk. Do not talk about bearer. Bearer has no one. When we come to checks, bearer has some meaning. We'll use that at that time. Okay? Till such time, don't waste your energy on confusing between holder and bearer. Okay? You are only worried about holder. Who is a holder? He is having possession. His name is entered there. He is entitled to payment on the instrument. Such a fellow only we have to talk. Other than that, if you talk, we are wasting our time. Okay? Got it? So, this is a diagram which could help you to understand the concept of a bill of exchange. It is very, very important. If you understand this, then bill of exchange will be simple for you. First of all, there is a drawer, Mr. Ram. Drawer means what? He has sold goods to Ravan. Ravan owes money to Ram. So, the relationship, now are you able to see? The maker owes money to the payee in promissory note. The maker of a promissory note is owing money to the payee. Here, the drawer is the debtor. Yes, sold goods. The acceptor or the drawee, he becomes acceptor at this stage. When the bill of exchange is prepared and signed by Ram, Ravan is the drawee. So Ram is drawing a bill of exchange. Okay, on Ravan. Signing. Why? Because Ravan owes money to him. Now, Ram can immediately send it to Ravan and say, hey, Ravan, sign. The minute Ravan accepts the bill, that minute Ravan is liable on it to anybody. Now, he sends it back to Ram. Now, Ram takes it and gives it to Lakshman, delivers it to Lakshman. Deliver means what? Possession is given by Ram to Lakshman. Lakshman becomes the holder. And the first payee, he is the payee one. Now, what he does? He can again endorse it to somebody, but no, he keeps it. And on the day of payment, he presents it to Ravan for payment. Ravan looks at the bill. Oh, Ramas. Okay. I only accept how much? 1 lakh, throw it at the face of Lakshman, get out. That's all. Settlement over, then that bill will be closed. That cycle comes to an end. This is the simplest and quickest method. But don't worry, there are going to be many, many variations on this theme. But first, understand the basic theme. Ram sells goods. Ravan owes money. Ram draws a bill of exchange, sends it to Ravan. Ravan accepts it, returns it back. Ram is in possession of the... drawer Ram is the creditor. No. Drawer Ram is the... I'm sorry. Drawer Ram is the... You're right. You're right, Darshan. You're right. Drawer Ram is the creditor, whereas acceptor Ravan is the debtor. Absolutely correct. Sorry, is the debtor. Once he accepts it, he becomes liable. Thereafter, Ram gets possession of the instrument accepted by Ravana. He gives it to Lakshman. Lakshman is now in possession. And also he is entitled because his name is mentioned as payee. He is the first, his name. Ram is directing Ravan. Ravan, I hereby direct you to pay a sum of rupees 1 lakh to Lakshman on or before such and such a date. Ravan looks at it. Okay, I owe this fellow 1 lakh. Take it, sign. Gets it. Ram gets it back. Then he gives it to Lakshman. Now, once Ram gives 1 lakh bill to Lakshman, to that extent, Ram's debt is covered with Lakshman. Suppose Ram owes 5 lakhs to Lakshman. Now, once he gives this instrument to Lakshman, 5 lakhs, 1 lakh is already paid. Only 4 lakhs due as of that moment. Now, Lakshman keeps it and presents it to Ravan. And Ravan settles it. That's it. The bill gets closed. Ram's account gets closed for 1 lakh. Ravan and Ram account also gets closed for 1 lakh. Because now Ravan owed Ram 1 lakh. Now that also closed. So that entire thing is over now. So this is how, you might ask me, don't you see how this type of methodology will enable credit? See, this is how credit was encouraged. In those days, in 1881, there was no bank. There was no banking system. So how to fund? So people who had money, they funded the system like this. So they said, okay, now, see, Ravan cannot pay immediately, but Ram is capable of waiting. Ram is a wealthy person. So what is it? Chalo, no problem. We'll work out terms with whatever you send to me. He accepts it and he gives it back. And then Lakshman takes it. So on and so. And then Lakshman also is needed. So what happens now? More than one person can use the same money. Later on, this would be called second tier money in monetary economics, where even without money, they're able to create money there. Think about it. Think about it. Okay. See, think about it. If Lakshman has one more NRC, what happens? Ravan owes money to Ram. That account gets closed. Ram owes money to Lakshman. That account gets closed. Now Lakshman is having a piece of paper. He goes to the mandi. In the mandi, he buys goods. Now to that fellow from whom he buys goods, he gives him this endorsed bill of exchange. So that fellow takes that bill of exchange. Now what happens? Lakshman is also getting goods on credit. See how Ravan has got credit. Now Lakshman has also got credit. Now that ultimate seller, now he's holding it. Sugriv, whoever is holding it. Now either he can again get into the negotiate it, or he can choose to wait, go to Ravan and take the money. So this is how the cycle works. It's a beautiful system of funding within the mandi. And remember, this whole thing is unsecured. It works on trust, which is why Mansfield studied how the merchants work. So later on, you'll be seeing something where if one person cannot accept it, another person accept it or not. That's because the reputation is very, very important. See, now Lakshman is buying goods from somebody. Instead of paying money, he's going to give them a piece of paper on which who has signed? Ravan has signed. Ram has drawn, drawer. So Ram is a well-known person. Very good. Ravan is the dry. Oh, wow. Ravan is also a well-off person. Yeah, no problem. Now, I get confidence. So I supply goods to Lakshman, keep the paper. I go to Ravan. Ravan pays. That's all. So this keeps on happening. Okay. So that is why this should be. Now, promissory note by definition itself is different from bill of exchange. I don't want to waste my time reading the definitions. Very, very important. In the promissory note, there is a promise to pay. Whereas in bill of exchange, there is an order for making payment. Okay. So there is an unconditional promise. Here there is an unconditional order. Main difference in promissory note, only two people. Maker, payee. Maker is debtor, payee is creditor. Whereas here, drawer, drawee, payee. Here, as rightly pointed out by Darshan, drawer is creditor. Drawee is debtor. Payee is ultimate creditor. Payee is ultimate creditor. Creditor of the creditor. A promissory note does not require any acceptance as it is signed by the person who is liable to pay. Bill of exchange needs acceptance. Unless the drawer accepts it, the bill of exchange is not. See, if the drawer does not accept it, who is liable? Let us say that when the bill, let us say Ram doesn't send it to Ravan. Instead, he gives that document to Lakshman and say, hey, you go. If Ravan accepts it, take the money, man. Go. So this fellow comes, Lakshman goes to Ravan and presents it for acceptance. Then Ravan accepts it. Then it gets alive. If Ravan says, go to hell, Lakshman, I will not accept the bill. Then the bill will bounce back to Ram because finally now Ram is liable on it. If Ravan does not accept it, Ram becomes the primary liable. So this is the relationship. Promissory note cannot be made to payable to bearer, whereas bill of exchange can be drawn. However, it cannot be made to payable to bearer on demand. Believe me, bill of exchanges cannot be paid payable to bearer. Only one type of bill of exchange can be made payable to bearer. That is check. Check is a kind of bill of exchange where the drawee is a banker. The drawee of a check bill of exchange is a banker. That bill of exchange alone can be bearer. Check. Check is a bill of exchange. So, check is not some special category of negotiable instrument. Check is basically a bill of exchange. Please remember this. Check is a bill of exchange, but let us answer our friend's question. Is acceptance is one of the essential element of bill of exchange? Yes, yes, yes. If the bill of exchange is not accepted, it becomes a piece of paper. Ram has to pay it. Acceptance gives life to the bill. Without acceptance, it is not possible. Some of you might remember your +2, you studied bills of exchange, where first there will be a sale transaction, then bill of exchange account debtor to, see, you would have said sales, Ram account debtor to sales. Then what entry you will pass? Bill of exchange account debtor or bills receivable account debtor to Ram. Ram account closed. Now bills receivable account will be there. But when you can do that, only if B is accepting. In B's book, what you will put? Purchase account debtor to A. Then A account debtor to bills payable. So that is acceptance. Only then, so that bills payable becomes due by me. So without acceptance, nothing can be done. Okay? Whereas there is a slight exception for check. Check can be made payable to bearer. Check need not be accepted because check is drawn on a specified banker and not expressed to be payable otherwise than on demand. And it includes the electronic image of a truncated check and a check in the electronic form. Please note, check is always payable on demand. So it should not be payable otherwise than on demand. For example, 3 months from site, pay. Like that, you can put a check. Check is payable on demand. Straight away, you can go to the bank and take the money. Or you can present it through your banker and take the money. So, check is always payable on demand. So, it should not be expressed as payable otherwise than on demand. It should be always payable on demand. Okay. And it includes the electronic image of a truncated check and a check in the electronic form. See, these two items were included very recently in 90s. When with improvement in technology, physical checks were to be scanned and used in clearing. Okay. So we'll see what is a truncated check and a check in electronic form. The expression banker includes any person acting as a banker and any post office savings bank. I'm sure you are aware that the Indian Postal Department is one of the best banking system available. I don't know if you're aware of that. The post office savings schemes, they are a banker themselves. They also have checkbooks and all that. So, banker includes any person acting as a banker and any post office saving bank. Payable to bearer, sorry, actually missed the starting was no problem. Payable to bearer, what question? Payable to bearer what? Check can be made payable to bearer. check can be made payable to bearer. But bill of exchange cannot be made payable to bearer. Normal bill of exchange cannot be made payable to bearer. Check is a special category of bill of exchange. Normally, in normal bill of exchange, the drawee will be any person who owes money to you. Yeah. See, suppose somebody does not owe any money to you and you raise a bill on him, you send a bill, draw a bill on him and you send the paper, you look at it and say, what nonsense. Throw it and you get out. But suppose he owes you money, then he has to accept it now. So this acceptance and all is not there for check because it is drawn on a specified banker with whom you have an account. So the minute you opened a bank account with the banker, there is a clear-cut contract between you. Whenever you send a check, there is a direction to pay money. Whoever is the payee or their order or the bearer, the banker will pay the money. So check alone. Check is the bill of exchange on which the drawee is a banker. Only banker. Specified banker only will become drawee. Payee will be anybody. So I am issuing a check to you. I am the drawer. My bank is the drawee. You are the payee. Now, instead of making the check payable to you specifically by name, I can give you a blank check. Meaning, or I can write on it self and turn it and endorse it and give it to you in blank. That is also done. Or I can say blank. Nothing is there on the check. Give it to you. Sign it and give. That's called blank check. Now you can take it, fill up your name, go take the money. Across the counter you can take. Okay. So check alone can be made payable to bearer. So what we mean by bearer is anybody in possession can go there, and even there, remember, somewhere your name has to be entered on that instrument as a entitlement. Okay. Good. Payable on demand means it should be payable whenever the holder chooses to present it to the drawee. See, normally bill of exchange can be made payable certain number of days from sight. See, we said acceptance now. Suppose Ram raises a bill of exchange which says, I hereby direct Mr. Ravan to pay 3 lakhs to Mr. Lakshman 30 days from sight. 30 days from sight. That means what? The minute Ravan receives it for acceptance from Lakshman or Ram, he sees it na sight. He signs it na, that is the date of sight. From that day, 30 days is there. So the bill will become payable only 30 days after Raman accepts it. At sight. Sight means when Ravan sees it for the first time for acceptance. It's called payable after sight. So 30 days after sight now. But check cannot be made payable after sight and all. On demand, at sight. The minute it is presented, it has to be paid by the bank. Whenever that guy comes, provided life of the check is there. That you will see later. It should come within that time duration. Otherwise, the check is stale. No. So long as the check is not stale, whenever it is presented, it should be honored by the bank. If they don't do it also, there's a problem there. Check in the electronic form means a check drawn in electronic form by using any computer resource and signed in a secure system with a digital signature, with or without biometric signature and asymmetric crypto system or electronic signature as the case may be. Boss, don't worry about all the technology. This is nothing but internet banking. This is nothing but internet banking. I'm sure many of you use internet banking. I'm sure you use it. What did you do? You want to make a payment to me? No problem. Or you want to make a payment to Blue Dot Foundation, my charitable trust, where we are giving a lot of educational assistance to people studying, children who are studying engineering, medical. We give. You want to donate money? No problem. What I should do? I will share my bank details. How you will make payment to me? You will open your bank application. Obviously, there will be a lot of, hopefully, and there will be a lot of controls on it. That's what they mean by asymmetric crypto system, electronic signature and all. There will be a password to enter. Then that specific transaction will also be encrypted. So you'll open your make payment or payments, some option will you open it. Immediately it will ask you to whom you want to make the payment. Then you will enter my account number, my name, my bank code, IFSC code of my bank branch. Okay. Then amount. Then it will ask you to confirm. The minute you press, that entire data, will be encrypted. That is, it will be garbled. It will be converted into a hash. And then that will be sent to the receiving bank, who will receive it. And they will acknowledge it back. And then that account will be credited. This account will be debited. So I have described the electronic banking system, also known as NEFT, okay, by which money can be transferred from one account to another account without physical checks. But still, that format, electronic form in which you are giving this instruction to the banker is a check. It is called check in electronic form. Okay? Check in electronic form. Today, I feel we are slowly getting out of checks. I feel physical check in another another 2 years' time, nobody will issue checks. Everybody will. See, today we have another great method of paying, which is you have payment system, payment gateways. For example, you have GPay, you have RuPay. I'm sure all of you use it. If I tell GPay or RuPay, you will immediately say, sir, I know, sir. Think and answer. Who is making the payment? Whenever you give a GPay instruction for making payment, okay, this is a question to the audience. Whenever you make a payment on GPay, I'm only using GPay because I use GPay. I like GPay. So, or whatever phone pay we have, everything is there. Amazon Pay. Don't go to Amazon Pay. Let's talk only about GPay and phone pay. When you make a payment on GPay or phone pay, who is making the payment? When you're using GPay and making a payment to somebody, who is making the payment? I want an answer. You are giving an instruction to pay, na? That is the unconditional order, directing a specified bank to pay a certain sum of money. Only two are to the order of. In this case, only two, not even order of. Because where is the question of order? Matter of seconds or matter of hours, the money will be credited in my account. So only two. There is not even no order and all. Only two, a certain person. In this case, exactly, Mayurji, you are absolutely correct. Bhavi Arora is also correct. It is the bank which is making the payment. So GPay is nothing but one more kind of electronic check in electronic form. Instead of using the bank's internet banking system, you are using another method called GPay, where your GPay may be linked to 2 or 3 banks. So you have the choice of choosing the bank. Correct. So that is again a check only. Same. It is a bill of exchange. So you are the drawer, bank is the drawee, I am the payee. You are directing the banker, except that instead of using paper and all that, you are using an electronic means. So that is why it's called check in electronic form. Correct. On your behalf. So you understood. So today we got GPay. So many of these banks may fold. I'm not joking when I say this. Finally, you'll have only a few large giant banks. About 5 or 6 giant banks will be there. And there is a good chance that you have localized banks also, which will take care of local needs. But they will all be networked. And you'll be having a different banking system in India. In the next 5 years, gone will be these public sector banks. Gone. Forget it. They are already there. The death drum is being hit for them. They will go. No more government running banks. Banks will be run by companies that are privately held by you and I, like HDFC Bank or ICICI Bank. So private banks. Okay. They will be run and you'll have. So this is something is going to happen. So believe me that the public sector banking system is in for a big shake-up in the next 5 years. There will be a lot of consolidation and sale. Slowly, they will be sold off. And finally, the government will not be owning any banks. RBI will be the controller. RBI will continue with the control mechanism. That will always be there. That cannot go away. But government will no longer run banks. Okay? At such high cost, at such huge cost to the public. Okay, making losses. And you know all that story. I don't know to tell you. So this is my view and not necessarily connected to the subject, but I'm saying. Now, what is a truncated check? Truncated check means a check which is scanned. See, in those days, when physical checks were the only method of making payment, all your electronic payment mechanism and all came hardly 10 years ago. Hardly. Internet banking itself was a thing of very difficult. Only some people will use internet banking. Everybody preferred to use only checks. There's a lot of resistance. 90s and all, no internet banking. Those banks which introduced internet banking were struggling to make these people come. Still, people wanted the comfort of going to the bank, talking to the clerk, signing the check, paying money. Then ATMs came. Then slowly credit card usage became better. Then debit cards started coming. Then our great enlightened Prime Minister brought demonetization. Then the cash need also became less. So people understood UPI is better. Unified payment mechanism is better. So they went like that. Absolutely correct. You have understood. And they ultimately satisfy check in electronic form. So basically, GPay, PhonePe and all are check. Check in electronic form. That's all. But also please understand, when I'm using GPay, this definition of bill of exchange, only to or to the order of is there. Now that order of is not there. Only to. If I'm making payment to Mayur Gupta, I can pay only to Mayur Gupta. I cannot pay Mayur Gupta or order in electronic form. So you give me your bank details, I'll send it to your bank only. I cannot send it to you or to any person whom you direct. So that part of it, no. But other than that, everything connected to the check is there. And only thing, it's not. See, when I prepare a check, give it to you, you take it to the banker, you put challan, you deposit it, then the banker takes it, presents to my banker, then my banker sees my account, balance is there, then he will debit my account, and then give confirmation, then your banker will get it, then your account will be credited. Oh, it took 48 hours, ma. If you are lucky. Today, that's it. You get your payment. So, I get my payment. In fact, almost all our clients pay by NEFT only. Nobody, I don't take payment in check. Okay, I don't give payment in check also. Sometimes I do, but most of the time it's NEFT. Just sit where I am and send it. That's how you get the money. Right? So, yeah, they're checks. This truncated form, the truncated check is another crazy thing. Those days, checks were used. At that time, clearing was needed. See, I gave you a check. Then you went to your bank and you deposited it. And then your bank got it. Then, like that, your bank will be having hundreds of checks. Like that, so many branches across Chennai or across Mumbai or across Kolkata, they will be there. So, there will be one clearing house in Chennai or one local place where all the checks will be bought. And then, in those days, I'm talking about 70s and 80s, people, human beings used to sort these checks. And then check. It's a mechanical activity. And then they will see which is the receiving bank. So at the end of the day, the whole thing will be tallied manually. And that led to a lot of mistakes. Then they decided, hey, this is not working. Let's do the clearing by. Then the programming started. So they said, hey, let's have electronic clearing. So the minute you had electronic clearing, I needed an electronic image of the check. Why should I transfer the entire physical check? Yeah. So they said, in your branch, you scan it. And then you send the scanned image to me. I will use that scanned image for processing. And an instruction for credit will be coming directly to you by software. So, truncated check means a check which is truncated during the course of a clearing cycle. Truncated means scanned. Don't think truncated means it is cut. It is scanned and then cut. Why? Because once it is scanned, again this check should not be used now. Therefore, they will cut it or deface it or put because the check should not be used again in clearing now. So once it will be scanned and then defaced or marked or cut so that we will know that this check cannot be used again. The scanned image can be used after that. Okay. And immediately on generation of an electronic image for transmission, substituting for the further physical movement of the check in writing. Idea is to prevent the physical movement of the check. So if your branch, your HDFC branch or your ICICI Bank branch, you have taken my check and you have given it to them for collection. So they will take it. Either the bank itself or else it will send it to the ICICI local clearing house where they'll be having an outsourced agency who will quickly scan and then truncate it. Thereafter, throughout the process of payment mechanism, only the image will be used. The electronic image will be used. The physical check will be sent back to the branch or There might be a depository who will keep it. After 3 months, all the checks will be destroyed. Physical check will be destroyed. But the scanned image will be used. Okay. So this is what truncated check is. Don't you see one thing? Negotiable Instruments Act and banking industry are very closely involved. Okay, especially with regard to check. So this is a check of a bank called HDFC Bank. Just for information. See, do you see pay? To whom you are directing? Pay. HDFC Bank only is the drawee. Okay, pay. You put my name, I'll be much happy. Srikanth, yes, like that or whatever. As I told you, don't put my name because at one point in time, money. Yes, I do need money for doing good, for helping education of children. Okay. So, and because Swami Chimnananda used to say, I need more and more money, give it to me. Because he used to ask openly to his devotees, give me more money. Why? Because I need to do good. That money has to go. There are children studying in a school where they are below the poverty line, children are studying. They need classrooms. See, I've already donated some money for them. Just not enough. More and more money is needed for that. So any amount of money will be useful to educate those children. And once they get educated, they become independent. They become so happy to, they can support their family. They can support the society. So this is my view. Of course, don't mistake me. So it will be wrong to say nobody needs money. We all need money. But for what we need money, that goal as it changes in your life, it will be good. Initially, yes, you earn for yourself, your family, etc., etc. Later on, when you reach my age, 55, 56, start thinking about doing something to society. Abhi to nahi. Abhi, you just work on yourself. But become strong, become financially independent. Then use a little bit of your money to good causes, especially in helping education, supporting infrastructure, etc. Good. Moving on. So this is a check, pay. And who is signing? You have to sign. Okay. Once you sign it, it becomes a bill of exchange. Date is mentioned, amount is mentioned in words and figures, signed. That's it. We are in business. This money, now this check has to go. But today, most of the transactions are not physical checks. As we already saw, they are in electronic form. Okay. Now, we are going to see a slightly interesting topic, but also a little, shall we say, this could be a little confusing. So, let us look at one sec. Checks are of two types now. Open check, crossed check. Open check. A check which can be presented to the banker and can be paid at the counter of the bank. Simple example, open check. I got a carpenter. He comes to do some work, small maintenance work. I have to pay him 4,000 rupees. I tell him, boss, you give me a bank account, we'll transfer it NEFT. No, sir. I want cash. Okay, maybe the bill is 12,000 rupees. Sir, I want cash. No, I tell him, boss, I cannot pay you cash. What to do? Sir, something do, sir, something do. If it's less than 10,000 rupees, I can pay cash. Okay. Then we split the transaction. You know that. I pay him 6,000 cash. Another 6,000, I give him a check dated tomorrow. Only his name is there. Rajkumar. I say, Rajkumar, you go tomorrow to the bank. Aaj to nahi. Aaj you take this, go, you have your quarter of whiskey or whatever you want to have. But tomorrow only you can go to the bank. Go to the bank. Which bank? State Bank of India. Go and present this check at the counter. Rajkumar. They don't care whether they're Rajkumar or Rajkumari. You sign at the back, they will give you the money. Go. That's all. That is called open check. Even such an open check, if it is payable beyond 50,000 rupees, PAN number of Rajkumar will be taken. And my account will be noted. Why are you making cash payment to Rajkumar? They will come and ask. There's a limit to how much you can do. But by and large, when you want to make immediate payment, you can go and take it from the bank. Boss. Later on, when you come to auditing, please remember one of the internal control point is check should always be crossed. That is the safety. It should be paid into the account of the person only. So when a check bears across its face two parallel transverse lines, means Parallel line, you know. Transverse means diagonal. So on the check, see, on this check, let me draw and show you if I can. If I can draw, I will draw. Pen is there now. Now, one sec. Unable to see. See here. I'm sorry. See in this part now. Okay, I'll do one thing. I'll use a laser pointer and show you. That is easier. See here, 1, 2. So 2 lines are drawn. 1, then another parallel line. 2 parallel transverse lines. When I draw, when a check bears across its face, 2 parallel transverse lines. It's called a cross check. What is the meaning of crossing? See, the bank, the paying bank is now instructed that the payment should not be made at the counter. It should only be made into the account of the other person. The minute a check is crossed, it is not payable to the bank bearer. It can be paid only through the bank. Means the bearer should take it to the Rajkumar should take. The minute I put 2 parallel transverse lines, then Mr. Rajkumar has to take it to his bank, deposit it, then that banker will come and collect the payment and it will be credited into the account. So the payment is to be made only through a bank. It cannot be made at the counter. That is called crossing. In crossing, there are many types of crossing. Some people also write on the check blank, not above it. Yeah, you can do that. Once you write not above, this is very, see, Mayurji, it's a very interesting point. Later on, when you come to holder in due course, I will tell you the danger of this crossing. First of all, blank, yeah, you can write. The idea is, even though it is a blank check, you are saying the maximum limit is only 15,000 on this instrument. Absolutely correct. Your approach is nothing wrong. You are restricting the liability is to 15,000. Absolutely correct. Banker has drawn it. Suppose somebody is writing in the check 25,000, bank will refuse to pay. They will say, I cannot pay above 15,000 on this check. Okay. So I'm rarely seeing this type of crossing, and I'm very happy and surprised to note that you've actually seen such a crossing. It's a valid crossing. It is nothing but a crossing with a limitation of liability. That's nothing wrong. Absolutely correct. See, in a way, you know, all your credit cards and debit cards and GPay and all, you have to go to your that app, and there you have to set a limit. Do you know that? I hope all of you have set a limit on internet transactions, on across the counter transaction, on tapping. See, your credit card or debit card can be tapped. On tapping itself, the money can be taken to the extent of the amount due. You have to put a limit on it. When you put a limit in your app now, see, suppose you have put a limit for tapping 5,000. Now you are trying to use the check for tapping for 20,000. It won't work. Why? Because you yourself have limited it to 5,000 or 10,000 or whatever. No? So if you have not done that, no limit, then jing, that's all. Whatever money can go. So this is the protection. We can't, no. You cannot transact unless you remove that, no, Mayurji? You are saying we can transact more than the limit set? I don't know. I don't understand. Can we? No, I was not allowed. Yeah. For example, internet transaction, you know, there was a limit. So when I tried to buy in Amazon beyond that limit using the card, it will not allow. I myself have given instruction now how it will allow. So in a way, I'm saying that is the kind of limit. Cannot. Sorry, you cannot. In a way, that is like putting not above 15,000. You understand? In a way, it's like that. Why I'm always comparing it with internet payments and the internet? Your generation, by the time you get into active commercial work and financial work, this check itself will be gone. Nobody will be using check. We'll be only using payment gateways and payment systems and mechanisms and online payment. And so, no way. And cash itself will become less and less. No problem. Because when something is told, I get worried and frightened. That's why I'm asking. No problem. So the point here is, boss, cash itself will go, ma. I'm telling you, enlightened countries like European countries and America and all, cash, no, they won't use. There's no way. Only in India, we use cash. Thanks to our enlightened Prime Minister, to a great extent, the cash has come down. And people are using more and more only. See, let us assume that somebody is a corrupt politician. They've got a lot of cash. Obviously, what will they do with the cash? That issue is coming up. Today, there's no appetite for cash. Earlier, you could do many things with that cash. Today, you go and buy gold jewelry beyond 2 lakhs. Gone. You can't use cash. And land, again, the guideline values are now going up. Very difficult. So, be careful. No, this is a different point. I don't want to go there. What I'm saying is, by the time, hopefully, when you guys are all getting into active finance and higher level positions, now by that time, giving myself 5 years, checks will not be there, this thing. So physical crossing may have no sense. That is why I'm giving this example of setting limits on transactions using electronic. So anyway, till such time, another 5 years, you have to write the exam, and I have to teach. So general crossing is there, special crossing, account payee, not negotiable. We'll see what. General crossing. Check bears across its face 2 parallel transverse lines with or without the words and co. Or not negotiable, like that, written in between 2 parallel lines. So you need not write. If you just put 2 parallel transverse lines, it's enough. But if you want to write inside and co, if you want, you write. Not negotiable. If you want, you write. No need. Okay. So if you want, you write. So don't say, sir, if I don't write, what will happen? Nothing will happen. If I write, what will happen? Nothing will happen. Okay. So whatever it is crossed generally. That means what? When a banker receives the crossed check, 2 parallel transfer, generally cross check, he cannot pay it in the counter to that person. He will simply return the check and say, please deposit it in your bank. Let your bank come and present it. I cannot pay it otherwise than to a banker. So this means what? The minute I cross a check, see, merely crossing a check doesn't mean it cannot be endorsed. Please understand. Merely crossing a check doesn't mean it cannot be endorsed. It can still be endorsed. Are you able to understand? That means I can reverse that, and if it's simply cross, general crossing, it is still negotiable. I can transfer it and I can write your name and give it to you. But you cannot present it in the counter. You have to take it to your bank, and through bank only you can present it. So a generally crossed check can be paid only through the banker or only to a banker, to the owner, the bearer or holder's banker. Special crossing. Where the lines of crossing bear the name of your bank, then the payment will be made only through that particular banker whose name appears. So if it's crossed and says Bank of Baroda, then that check should be deposited in Bank of Baroda and only it will be paid only to Bank of Baroda. Rarely I have seen special crossing in my life. I've heard about it, read about it, taught it, but I have not seen. Anna, in cross check, the bank does not become the payee. Anna. Payee is still you now. Anna, Mayur Gupta, Anna, your name is entered here. Your name only is entered here. I am putting account payee means what? It will not be paid to HDFC Bank or your bank. It will be paid only to you, but not directly to you on the counter. It will be credited in your account with your bank. Suppose you are having an account with the Indian Bank. I am giving you a check. You will take it to Indian Bank, deposit it. Then Indian Bank will present it to HDFC Bank. HDFC Bank will pay to Indian Bank, not to Indian Bank, to your account with Indian Bank. So, in a cross check, bank becomes the payee's agent. Are you listening, Mayur? In a crossed check, the bank, collecting bank. See, your bank is called collecting bank. The collecting bank becomes your agent. So, on your behalf, they are presenting the check to my banker, collecting the money. Have you understood? So, in crossed check, I will complete your sentence correctly. In crossed check, bank becomes the payee's agent. Are you able to understand? Same way, they also become payer's agent. The HDFC Bank is my agent. That your Indian bank or whichever bank is your agent. Okay. Your agent is presenting to my agent. For my instruction, my agent is paying it to you, and your agent is collecting and crediting your account, etc., etc. This is called banking. In fact, once upon a time, the manager of a bank used to be called an agent, actually. Basically, he was an agent. You already studied agency, so now you are strong. You know who is an agent. Okay, now account pay crossing, I've already mentioned. Account pay means what happens? I cross, and within the two transfers lines, I write account payee or account payee only. That means what? Mr. Mayur Gupta now cannot endorse because it is payable to Mayur Jina. So only Mr. Mayur Gupta. Mayur Gupta's account, it has to be deposited, it has to come through his bank. And it will be credited only to Mayur Gupta's account, no other account. When you are doing internet banking now, it is only account pay crossing. In a way, you are directly paying into that account. Okay, the idea is that account only should get the payment. No other account it will be paid. It cannot be endorsed. That's all. Once a check is account pay crossing now, it is no longer negotiable instrument. It is just a payment mechanism. That's all. So that is how it is. Not negotiable crossing. See, general crossing, we said we can write not negotiable. But when you write not negotiable in the two parallel lines, if you write either inside or outside the lines, when the person who is taking a check crossed generally or specially, bearing the words not negotiable, then that person cannot have a better title to the check than that which the person from whom he took it after had. So once a check is marked not negotiable, it can be crossed, it can be specially crossed also to whatever it is. See, now if you talk about this, it will be very interesting. Somebody was telling, who was that? Mayur Ji only. Mayur Gupta has been continuously talking. So not above 15,000. Now, suppose you have written not above 15,000 in the check, right? Not above 15,000. Now, think about it. You owe me 5,000. You owe me 5,000. You have given me a blank check. Amount also not written, payee name also not written, sign. But you have very smartly put not above 15,000 on your check. Now, are you able to understand? Now, I have taken that check now. Now, I am entitled to how much from you? Only 5,000. Our contract or our understanding is only 5,000. Now, I go out and talk to some Mr. X or Y, and then I put 10,000 there or 12,000. Can that check be passed to a 12,000? Yes, because up to 15,000 it is entitled. Whereas I put not negotiable. Now what happens? You send it to the bank. The bank clears it. No, the bank will, if they clear it also, the bank is liable because the bank will clear it. You will get your 12,000. But the person who made the check now from you, they can collect the balance amount. Why? Because when you took that not negotiable check, you are now restricting your entitlement to the amount that the person from whom you took it had. So you took it from me now. I could not take more than 5,000 from that gentleman. So I cannot give a better title than this. That is why smartly I put not negotiable and gave it to you. Now, when you go and present it, the bank might clear it, but in a dispute, the case will be that you have to give it back to this person. Okay. So why? Because you are entitled only to 5,000. That is, the person signing not negotiable cannot give better title, okay, than this. Now, in fact, subsequently, if you transfer it to somebody, that fellow also will not get better title. You will all be tainted because the check is crossed and not negotiable. There is one exception for this. When we come to that, I will tell you. But as of now, not negotiable crossing, if we put this 15,000 and this not above 15,000 becomes relevant. Okay. The person taking that not negotiable crossing check will be entitled only to the amount which the other person from whom he received it can collect. Who may cross? Drawer may cross, holder may cross, Banker can cross. If it is crossed generally, then he might cross it specially, so that it can be presented only through him. Like that. Holder can always cross. Please note the use of the word holder here. Never use the word bearer. Always use the word holder. Holder is the technical term. Okay. Holder can cross. Drawer definitely can cross. Now, check payable to order. Means what? I am not account. It's not an account pay crossing. It's not a not negotiable crossing. Even if it's not negotiable, still it is endorsable. But the endorsee will not get better title than the person who transferred it in not negotiable crossing. Suppose we are making the check payable to order. Pay. See, you can see that wording here. Pay so and so or order or bearer. The minute it's payable to order, then it is endorsed by or on behalf of the payee. The bank is discharged by payment in due course. See, you are getting a check from Mr. Ramesh. Pay Mr. Mayur Gupta. Ramesh sign. Sign is correct. No forgery, nothing. Now, you reverse it. You are Mayur Gupta. Now you put Keshav Thakur. Pay Keshav Thakur sign. That's all. Now, bank pays Keshav Thakur. Bank is discharged. That is the greatness of negotiable instrument. Once the holder presents it and the payment is given to the holder validly, everybody in the chain is discharged. Banker is discharged. Drawer is also discharged. Drawer is also discharged. Ramesh is discharged because he gave the check to you. Account closed. You gave it to him. Bank paid him. Now that's all matter over. Any dispute between Keshav Thakur and Mayur Gupta or Mayur Gupta and what will be? That is your problem. And I am relieved. Banker is discharged. I am discharged. Okay. As regards bearer check, the rule is once a bearer, always a bearer. A banker gets a good discharge by payment in due course of the amount on a bearer check to the holder of the check. Means Raj Kumar, pay Raj Kumar, no crossing, nothing. Fellow comes to the counter and signs Raj Kumar on the back and takes it. Okay. But see, by paying that gentleman, the bank will be discharged. No doubt about it. Still, today, bankers are bound by RBI guidelines. When suddenly somebody out of the blue comes now and he wants a payment, they will ask for a PAN number. And for example, above 50,000, if it is payable by cash, they will want the PAN number of that person. They will ask for PAN number. And they will report it to the Reserve Bank of India. Enforcement Directorate. You will be seeing that when you come to final. Above 50,000, if consistently you make cash payment, then that person who receives it, PAN number will be collected. Your bank account details will be sent to the Reserve Bank of India. And they will come and ask you, why are you giving cash payment? To whom you are giving? What are you doing? Are you doing money laundering? Like that, they will ask. That is why, if you are setting up control mechanisms in a company, internal control systems, always please don't allow cash payment. First rule you should put, payment will always be by check. No cash. In my firm, no cash. Only check or funds transfer. Take it in. Even employees, no check. Rare cases when they come and say, like very, very small amount, servant made and all that, we pay by cash. Even then, we encourage inclusivity, financial inclusion. We ask them to open a bank account, transfer it to the bank account. Debit card, how to use cards, we show them ATM card. Take it whenever you want. Don't take in cash. Payment of crossed, see what we will do, we will go till 7:45, have a small break for 5 minutes and start again. We are making good time. Hopefully we should be able to finish this. So payment of check crossed generally. Where a check is crossed generally, the banker on whom it is not shall not pay it otherwise than to a banker. Specially means you have to pay it only to the banker to whom it is crossed. That's all. Where it's cross-check, if it is paid through the bank, that is the banker is discharged. That's all. Once I pay to the other banker, that's all. Okay. Don't see, this is the type of sentence, Mansfield will confuse you. Don't waste your time on it. where the banker on whom a cross check is drawn has paid the same in due course, the banker paying the check, and in case the check has come to the hands of the payee, the drawer thereof shall respectively be entitled to the same rights and be placed in the same position as they would respectively be entitled to and placed in if the amount of the check had been paid and received by the true owner thereof. Simple boss. I am the drawer. I have given it to you. Okay, crossed a check, and you have taken it. You have opened a name in the false name, and you have deposited. It's coming through. Payment is made, and then the drawer and the banker are discharged. That's all. But banker paying a check crossed generally otherwise than to a banker, or a check crossed otherwise than to the banker to whom the same is crossed, or his agent for collection, being a banker, shall be liable to the true owner of the check for any loss he may sustain owing to the check having been so paid. See, when I have crossed it, then you have to pay only to a banker. You should not have given the money at the counter. If you do that, then you are liable to the true owner, right? You means banker. Exception. That's why I told in this case now, where there is no, I told you now where there is no forgery, etc. Because a banker can refuse to pay a check where he suspects forgery. The minute the banker compares the signatures, the signature of the drawer in the specimen signature with the bank, if there is a difference or if it is possible that there could be a forgery, they will not pay. So, where the check is forged, then such bank shall be liable to the, where if any drawing bank makes a payment on a check on which drawer's signature has been forged, then such bank shall be liable to the true owner. Thus, the paying banker shall be liable if it makes the payment of the check on which drawer's signature has been forged. Otherwise, once I make a payment against the check through a bank or whatever, I don't have to bother. I have paid. This is the payee's name. Bank presented, I paid. Matter over. But if the check is forged, then I should be alerted. So bank should never honor a forged check. Banker receiving a forgery is a nullity in law. Forgery is a nullity in law. A banker who has good faith, in good faith and without negligent received payment for a customer of a cross check, generally or especially to himself, shall not, in case the title of the check proves defective, incur any liability to the true owner of the check by reason only of having received such payment. See, there is a check. I am the true owner entitled. Okay. Now what happened? See, let us say, for example, I will give an example. Ramesh has written the check, signed the check, payable to Mahesh. Now, check is payable to Mahesh, not crossed. Not crossed. Now, our Mahesh beautifully and very intelligently signs without putting name of the payee blank. Am I correct? And he gives it to Suresh. Now, Suresh is having a check. Very dangerous document. Kyun? Because it is signed by Ramesh, drawer, payable to Mahesh, payee. Now, Mahesh, payee has also signed the blank. No payee's name is mentioned by Mahesh. Mahesh sign is there. Now, Suresh is having that. What Suresh should do immediately? Write his name. He is not writing, simply looking at it. Beautiful check like that. Quietly, he keeps it in the drawer and goes. Suresh has a servant, Keshav, or whatever. No, sorry. There is a Keshav Dagur here. Some X. Now that X comes, this is a super idea. So, fellow is already having some problem with Suresh, and he wants to run away. So, what he did, that Suresh's employee, he takes that check. Now he writes his name there, goes to the bank, his bank, and he presents the check. Suresh is not bothered. He's gone enjoying life. He's not even checked whether the check is there or not. Bank honors the check. The check honor whose bank? Ramesh bank. Ramesh to Mahesh, Mahesh to Suresh. Suresh's name not mentioned. Servant takes it. Servant writes his name, deposits in the bank. Through bank only it goes. Right, Riley, his bank presents it to Ramesh's bank. Ramesh's bank pays it. Now, who is the true owner of the check? Strictly speaking, Suresh. Strictly speaking, Suresh. because last man who was entitled to it was Suresh. But the bank has paid it. See, Ramesh's bank has paid it to that servant now. That's okay. The servant's bank has received it now. They are not liable. Later on, if the title of the check proves defective, then the banker is not liable. Now, who will file a suit on who, you tell me? I hope, Gauriji, the examples given by me is good. I'm giving an example. Are you listening? Now, who will file suit against who, you tell? Only, see, if Suresh goes to Mahesh, he'll say, go to hell. I gave you the check. You took it now, head out. Then if Suresh goes to Ramesh, he'll say, what is your problem? I gave it to Mahesh. Mahesh signed and gave it to you now. What is, you get out. If Suresh goes to Ramesh's bank, they will say, hey, what are you talking, man? Check came to me, signed by Ramesh, no forgery. Mahesh, I don't know who is Mahesh. Name of the servant is there. I paid. Through the bank only I paid. It is crossed, I paid it through the bank. What are you telling? Get out. Now, finally, he goes to the servant bank and says, hey, you are the fraud man. On his behalf, you do. He said, look here, read section 131 of the Negotiable Instruments Act. I have only collected. It is Ramesh's signed, no forgery. It has been honored by Ramesh's bank. I don't know who is Mahesh. I don't care. Whose name is mentioned there? My client's name is mentioned there. I presented it. I collected it. So finally, what you should do? Go to your own servant, man. File a suit. Get the money from him. Don't waste my time. This is what everybody will tell. So Suresh has only one person on whom he can file a suit. That is the servant. Servant is already gone to Bihar. He can't be caught. Okay, that is the end of story. So this is how it is. You understand? So who is the fool in this? Suresh. What is the foolishness? Taking blank endorsement and not writing his name. Or giving it to somebody who will keep it safely. See, in my office, I have an accountant, a lady who's a trustworthy person. I give it to her. Even then, I won't give it to her, I'll tell you. Because it's a danger for her now. See, she is honest. Somebody else may be dishonest. So, don't take a risk. Blank instruments are time bombs waiting to burst. Do not encourage blank instruments. Blank instruments are time bombs waiting to burst. Do not encourage. Suresh will have to file a suit against servant, but to Keshavji, where is that servant? You go and find first. Then you file a suit. Fellow will run away. You have to report. What you should do, you should file a criminal complaint with the police first. And then the police will it's up to you. Okay. Anyway, I am only explaining section 137. I don't care about Suresh. What is his problem? That is his problem. What happens? I hope section 131 is clear to you. That's all. Now we come to a very, very important topic. Inchoate and ambiguous, which is exam point of view also important. Holder and holder in due course. Oh, very, very, very important topic. Suppose you ask me, sir, in this topic, which is the most important, I will say kinds of promissory notes, you should be thorough. And holder and holder in due course. So that's why I put that emoji there. So don't worry, it is, sir, what is holder? I have been trying to explain to you holder, holder, holder. You are all getting confused with bearer. So, bearer, chhod dijiye. Bearer, holder. So, I am in possession. My name is mentioned, or I am entitled to payment on that instrument. I am a holder. Who is holder in due course? That is a very, very important question. We will answer it in another 5 minutes, a small break. After 5 minutes, we will take up holder. Maybe I will teach holder and holder in due course. And then I will come to all this. Okay? Don't worry. Aaj we will finish some level, and kal we will, inshallah, finish the topic. Okay? So, a small break for 5 minutes. Sir, break, sir. Welcome back from your well-deserved break. So I told you, see, this part of this topic now, it becomes a little chicken and egg type of issue. Why chicken and egg? Because suppose I want to teach inchoate and ambiguous, then I have to teach holder and holder in due course. So better I teach holder and holder in due course. That is easier. But before we do that, let us look at the life cycle of a bill of exchange. So just to study it. Earlier I showed you one simpler diagram with Ram, Ravan and Lakshman. Simpler. Here slightly more complicated. It's called life cycle of bill of exchange. When you studied 10th standard or 8th standard biology, they would have told, life cycle of a butterfly or life cycle of mosquito, like that. Life cycle of butterfly, caterpillar, pupa, chrysalis, then butterfly. Like that, this is the life cycle of a bill of exchange. Drawer draws a bill of exchange. Nothing happens. He draws it. Then he gives it to the payee or endorser. Then the payee or endorser goes to the drawee and presents it for acceptance. At this stage, no payment, only acceptance. So, the drawer has drawn a bill saying, pay to the payee at sight. At sight means what happens now? The minute I present it, it has to be paid. But if he says pay the drawee 30 days after sight, then first I have to give it to you for acceptance. And then you will accept it. And it will come back to the payee. The drawee will accept, come back to the bill. Now, the bill gets the life. Drawer draws, nothing happens. Drawee, it's presented for acceptance. Drawee accepts. Sometimes the drawer himself can present it for acceptance. No problem. And then once the drawee accepts it, the bill gets life. As in the case of Ram and Ravan, Ram presented the bill also for acceptance. Then the accepted bill, he endorses it to, he gives it to the payee Lakshman. Lakshman in turn, or payee in turn, will endorse it. Endorse, both are same. INDOR, ENDOR, doesn't matter. Both are having similar meaning. Endorse. So, endorses it. Endorsing means what? I make that instrument payable to you. I am the endorser, you are the endorsee. That's all. When I make that instrument payable to you, you are the endorsee, I am the endorser. So what I do, I already told you many times. I reverse the bill. On the reverse side, I write your name, pay. With or without the words pay, sign. The bill is now negotiated or endorsed. Got it? Negotiation, endorsement, all are one and the same. Endorsed. Now the endorsee one, in turn, he don't have to keep it. He can transfer it to endorsee two, endorsing. So look at the back side. Don't say back side. Say reverse side. On the reverse side of the bill, what will be there? First of all, the drawer would have drawn on the drawee, payee's name will be mentioned. Then on the reverse side, first payee will sign. Pay endorsee 1, payee sign. Then pay endorsee 2, endorsee 1 will sign. So that instrument held by the endorsee 2 will go to the drawee. Now, once the drawee accepts it, he gets a new name. He is called acceptor. See, I don't know if it is there. In Tamil Nadu, it is not there. But in some Sindhi communities, when the girl gets married, on marriage, that boy's house, they will give her a new name. I don't know if that is true. Because I know one Sindhi lady who told that my sister got married, she got a new name. So at home, we will call her this, but there she will call some. So when I saw the records, some name was there, but this lady was referring to her as so-and-so. How can you tell like that? No, for us, she is that name. But once she got married, she became Mrs. Lajwani or whatever. But that at that time, she changed her name like that. So like that, the minute the drawee accepts the bill, he becomes acceptor, new name. So the endorsee 2 will present the bill for payment. Drawee makes the payment. That's it. The bill is, the instrument is discharged. Later on, when we see discharge, there are two types. Discharge of instrument, discharge of party. Please be careful. So in this example, when drawee pays to endorsee 2, the instrument is discharged. All the parties are discharged. That's all. Matter gets spent. That is why this is called life cycle of bill of exchange. Please understand it. Now in this example, payee, endorsee 1, endorsee 2, they are all holder. They are all holder because they are entitled to the payment. Their name is mentioned and they are in possession. They are all holder only. The word holder, any one of them. But whether they are holder in due course, be careful. In the meantime, Keshav Thakurji asks a question. Let us see. Sir, can we say holder is a person who has possession of instrument? The two who can recover amount from the party. Exactly. Your understanding is correct. All these people, payee, NRC1, NRC2, they are in possession of the instrument and they can recover. Because their name is mentioned. Clearly, NRC1's name is mentioned, signed by payee. Clearly, NRC2's name is mentioned, signed by NRC1. So they are entitled to payment. And they have received it. And another thing, they should receive it for consideration. That means, and payee has received some consideration from NRC. Means it could be supply of goods, whatever. Something has been done for which the payee has done. Okay. So, after the drawee of a bill has signed his assent upon the bill, then that person, he is called the acceptor. I already told this. In fact, sometimes there can be bills in parts or bills in sets. If so, once he has signed one of such parts and delivered the same, or given notice of such signing to the holder or to some person on his behalf, he is called acceptor. Thereafter, the drawer is discharged. Once the drawee accepts the bill and becomes acceptor, the drawer is discharged. Now, acceptor for honor. When a bill of exchange has been dishonored by non-acceptance, see, later on when we come to dishonor, you will see dishonor for non-acceptance, dishonor for non-payment. Dishonor for non-acceptance will only discharge parties, but it will not discharge the instrument. Liability on the instrument will continue. But dishonor for payment is different. So here's example where NRC, let us say for example, payee doesn't present it for acceptance. He gives it to NRC1. NRC1 takes it to drawee and presents it for acceptance. Drawee says, go to hell. I don't accept. Now, whose name is involved here? The drawer's name is involved here. Or even the drawee's reputation is involved. So what happens? Remember, all this is happening in 1881, where people actually believed in honor, where people actually had self-respect. Not today's commercial world where fellows borrow from the bank and run away. Okay? Not that type of cheap world. That was a world, that was an era when people actually had honor and they had respect. So, due to genuine reasons, this fellow drawee is not able to accept it. Then, any other person in the mandi, mandi means marketplace. Any person will stand up and say, hey, bring that bill to me. I will accept it. And he is called acceptor for honor. And later on, when he makes the payment for honor. Obviously, an acceptor for honor can recover the money from the drawer. Are you able to understand? Because basically the drawee owes money to the drawer, but on his behalf, somebody has accepted it and paid it. Then that man is entitled to receive money from the drawer. Because the drawee's liability is not there because he has not accepted it. But drawer's liability is primary. The drawer's liability is primary to the payee and the NRC1. So any acceptor for honor who pays the money can recover from the drawer. Got it? So actually, in your syllabus, acceptance is not there. For your information, in your syllabus, acceptance is not there. Still, for the information, I'm telling this. So don't worry, acceptance is not there. Acceptance for honor and all not there. Just for your knowledge, I'm telling this. Now, the holder of also. To put this in context, listen to this example and story. See, this happened in a time when banking was not done. There was no electronic banking, no checks, nothing. You had traders, merchants, who traveled all over the Gulf. From Cochin, they will go all the way to Doha. From Doha, this fellow will go to Muscat. From Muscat, again, this fellow will go to Surat. So he was merchant. So he needed money. Now, remember in those days, people, when they are trading, they have to go. They carry gold with them. In those days, gold and silver coins, because they might be, anything could happen to them and that gold may be stolen. So they don't want to carry that. So what they will do, for a moment, there is a merchant in Surat. The Surat merchant is buying goods in Surat, textiles and all that, and he is loading his ship and he wants to go to there. Or the Surat merchant simply is traveling to Muscat. His goal is there. When he goes there, he wants to buy dried fruits, other items there, and bring it back to Surat, sell it all over the place. Yeah, that's his idea. But he needs money. He has to buy there. No? So instead, what he does, he goes there and he buys the goods. But before going to Muscat, he goes to a Shah in Surat. They were the money lenders, the people who bankers, the indigenous bankers. So he goes to the Shah and he tells the Shah, I'm going to Muscat. Oh, really? Go. Chal. It's a good idea. Go. The weather is also fine. So you can do the whole thing within 30 days. Come back. What are you going to do? No, I'm going to buy some goods and all. He doesn't tell what he wants to buy. Okay, Chala, what do you want? No, I want some money when I go there. Okay, done. I'll do one thing. Now comes the bill of exchange. The Shah in Surat, he draws a bill of exchange on a Shah in Muscat. There were Shahs in Muscat also, don't worry. So the same Gujarati gentleman, another Gujarati gentleman was sitting in Muscat. And so this guy will write a hundi. It's called a hundi. That was called a hundi. Simply, this Shah will draw the bill on that Shah. And he will say, pay to this guy whatever he wants. See, there will be some interest element in it because this merchant will pay 1 month's interest only, take it. Because he's getting credit now, so he'll go there. Once he reaches Muscat, he will take this parchment paper or whatever and go to the Shah in Surat. And he will show. Now that bill is the Surat Shah is saying, pay to this merchant on site, so and so. So now this guy goes there and shows. On site, he has to pay. So immediately this guy takes the money, goes to the market, buys the goods, leather, dried fruits, whatever he wants, he buys, loads the ship, comes back, makes the money, then pays to the Shah. Are you able to understand? Pays to the Shah. His cycle is over. Now that Shah has paid him. Now there will be an open account between him and the Surat guy. So that will get adjusted. In other words, these Shahs were running the banking business in those days. This is how they used to do banking. And so just giving you an example. One more thing this fellow can do. The Surat merchant now, he need not go to the Shah in Muscat at all. He's in a hurry. He goes there. He enjoys himself for 2 days. Then he takes this bill, goes to the mandi. There in the mandi, he goes to a particular leather merchant and says, hey, sell me. He buys. Or he goes to a particular precious stone seller and he buys gems and jewels. Whatever he buys, he says, I don't have money, but I have this note. Show me. Oh, it is drawn on that Shah. I know he is capable. So immediately that guy will take it. So the payee, the Surat merchant, will endorse it to the Muscat guy. The Muscat merchant will take it and keep it. He may present it to the Muscat Shah for acceptance or payment. Immediately on site it will be paid. Are you able to understand what's happening here? Without any money being transferred, transactions are happening. In a way, second tier money is being created. Okay? Think about it. That way, you will understand why the Negotiable Instruments Act was a very important thing in those days. Because the British, when they came, they found these were all happening nice. But sometimes there were disputes between the parties. And when there was a dispute, the judges had to keep worrying. So Mansfield said, no worry. This is the rule. Like that, so Mansfield created the Negotiable Instruments Act as a code for facilitating these transactions. That has now become what we call the Negotiable Instruments Act. Do not think that it is an outmoded or outdated law. Some portion of it is now irrelevant, no doubt. But some portion of it is still relevant and the principles are still relevant. The liabilities, the obligations, the rights, they're still relevant. It's only that we moved from paper and pen and printing to digital mode. But still the liabilities are the same. The commercial relationships are the same. Correct. The acceptor runner is, in fact, in my own example in Muscat, suppose that Muscat Shah refuses to accept the bill or when on presentment he does not pay. Then somebody else now in the market says, hey, the Surat Shah's name will be affected. Therefore, I will pay. Okay, he's a stranger. He may accept it and say, you go, I will pay, I will take care. Or he may pay. He becomes a payment for honor, whatever he does. So he is a stranger. But why is he doing it? To protect the name of the Surat Shah. Because so much trust is there on these Shahs. And if one man is seen as defaulting, the whole system will collapse. So for many genuine reasons, the Muscat Shah may not be able to honor or pay. No problem. Another man will take it up in order to ensure that the system does not collapse. And as I keep on telling you now, in those days, they were men of honor. I'm again telling you, that way Sindhis, Gujaratis and all, their honor is honor. Believe me when I say this, honor is honor. And I've had extremely good dealings with Sindhis and Gujarati merchants and people. I've learned so much from them on finance business and finance and all. Some of the, even now, a certain degree of honor is there. Believe me when I say this. It's unfortunately only after independence that all the rogues have come, the politicians have come and they have spoiled everything. So the system got collapsed and corruption came. So people understood, even if I pay money, I can do anything. But in those days, it was honor and values are more important than this. And the entire negotiable instruments, actually, the entire financial system works on honor, my dear friends. See, finally, if one guy defaults, the entire system comes tumbling down, and Humpty Dumpty had his great fall. So everybody is responsible to sustain the system. One untrustworthy person in the system will collapse the system. See, one Ramalinga Raju could collapse the entire share market, financial system. Trustworthiness is more important. That is why you and I, as finance professionals, once you become a member of our institute, remember, we are upholders of the honorableness of our financial system. So you and I should never be involved in fraud or in doing any nonsense, forgery and all. Never. Now comes to holder. The holder of a promissory note, bill of exchange or check means any person entitled in his own name. Do you understand what I keep on telling? Entitled in his own name to the possession thereof. So, any person entitled in his own name to the possession thereof and receive or recover the amount due thereon from the parties thereto. So, the holder should be a person entitled in his own name. This is very, very important. To the possession of the instrument. So, possession is also needed. Entitled in his own name. So, simply don't confuse with bearer. Bearer will be holder. But to become holder, he should also be entitled in his own name. Got it? So, he must be entitled to receive or recover the amount due on it. Which means what? All these guys are holders, na? All these guys are holders, na? Payee, NRC1, NRC2. They are having possession and they are entitled in their own name to have the possession. See, in that sense, a bearer of a bearer instrument, the bearer of a bearer instrument is a holder. But in India, you cannot have bearer promissory note. You cannot have bearer bill of exchange. Only bearer checks are possible. So there, the bearer, that's why I said check is the only exception. The bearer of a check, even though his name is not mentioned there, becomes a holder. Are you able to understand? Only for check in blank, where a check is endorsed in blank or payable blank check, the payee's name is not mentioned, then the bearer of that check will be the holder because he can put his name and take it. But he'll be only holder. Will he become holder in due course? You have to see. Holder in due course means, first of all, holder in due course should be a holder name. So he should be in possession and it should be entitled in his own name to the possession of the instrument. Holder in due course means any person who for consideration become the possessor of a promissory note, bill of exchange or check if payable to bearer. Or the payee or endorsee thereof if payable to order. Okay. Now, please understand. So first of all, bearer instrument means only check is possible. So forget promissory note, forget normal bill of exchange. It can never be made payable to bearer. Therefore, only check. Please understand, though promissory note and bill of exchange are mentioned, in India, you cannot have promissory note or bill of exchange payable to bearer. So only check is possible. So all our examples on bearer instruments, we can give only checks. Please understand. But if it's promissory note or bill of exchange can be payable to order, in which case payee or endorsee will become holder in due course if they received it for consideration before the amount mentioned in it became payable. See, even after the amount, that payable amount, that the date of payment is over, you can collect money from the drawer, but the drawee is not liable. So before the amount mentioned in it became payable, and without sufficient cause to believe that any defect existed in the title. Give a simple example. Our own servant example is a beautiful example. Suresh ka servant hai na? He is in possession. He is in possession. Yes. He has written his name there. So in his own name, he is a holder. But is he a holder in due course? Is he a holder? He is a holder. But is he a holder in due course? The servant? No. Why? Because he did not become possessor for consideration. What did he give to Suresh? Nothing. He stole it. So he is a thief. So he is not a holder in due course. Are you able to understand? He is not a holder in due course. So the servant who stole that check, he is a holder because he is in possession and is entitled in his own name, but he is not a holder in due course. Got it? For consideration, he became one. Now, suppose that servant comes to me. That servant comes to me and he says, sir, I urgently need to go to BR. Kindly help me. Give me this money. So I said, I'll give you what. So check, he writes the amount of 50,000, sir, 50,000 payable, sir. Ramesh Saab has given it, but to be honored, sir, kindly give me 50,000. At least give me 45, sir, I'll run away. So I don't know all this. I say, okay, poor fellow, let him die. And I was getting 5,000 benefit. So take it, man. And I'll keep the check and I will present it. So he endorses it to me. See, Mahesh made an endorsement in favor of blank. Their servant has put his name. Now that servant, as that subsequent endorsee, he endorses it to me, Srikanth X, like the people use. I take it to the bank. Am I a holder in due course? Servant is holder in, he is not a holder in due course. But am I a holder in due course? It's a very, very important question. Am I a holder? Yes. Am I in possession? Yes. Am I entitled in my own name? Yes, my name is mentioned there. Did I receive it for consideration? Yes, I gave him 45,000 rupees and took it. Understanding is, he is happy, he is satisfied. There is consideration. Am I the payer or endorsee? Yes, I am the endorsee. Am I going before the amount mentioned? Yes, I am going. Am I doing it without sufficient cause to believe that any defect existed? That is the question of fact. I have to prove that I did not know about this theft by the servant. I don't know who that gentleman is. And I took it in good faith and I gave it. Now, suppose I know Suresh very well and I know this guy is his servant and I know that this fellow suddenly comes and gives me a check endorsed by Suresh to him. Now I don't have sufficient cause. Now, hey, this guy is a servant. Why is Suresh giving him? So what I should do first? Take my mobile phone. Hello, Suresh, this fellow has come. What is this? So if I can't believe, now I cannot prove. So that sufficient cause to believe that any defect existed is a dicey part of holder in due course. The holder in due course should show he took it in good faith without knowledge of the defect. Understand? Sale by non-owner, you have studied now in Sale of Goods Act. Go there. There you will find. Where any goods are obtained by misrepresentation or fraud. I am the buyer. In good faith for consideration without any cause to believe that there is any defect in the title. Then I am a non-owner who can sell. Though my title is bad, I can sell. So I get better title than the seller. This is something we have to understand. Let us see Keshav Thakur's question. If in your example, if servant of Suresh transfer it to Rajesh for consideration and Rajesh in such case can say, yeah. See, in this case, servant, yeah, both servant and Suresh. See, servant is not a holder in due course. Please understand that. Very, very important. So don't confuse servant of Suresh. Yeah, exactly. If the servant of Suresh transfers it to, why Rajesh? I gave my example, Baba. Rajesh. Okay, Rajesh. Good. Instead of Srikanth, you put Rajesh. Now the question is, whether Rajesh took it without sufficient cause to believe that any defect existed. That is one crucial question. If you answer it in the affirmative, yes, Rajesh had no sufficient cause to believe that any defect existed in the title, then Rajesh is a holder in due course. You have correctly understood. But that question has to be answered. Okay. So in the exam, if they give a question, please don't write that condition. If provided, is Rajesh a holder in due course? Provided he has taken that in good without cause to believe. Okay. So he should be a holder. He should be in possession. He should be entitled to receive the payment. He should become the holder before the amount mentioned in the instrument became payable. Before maturity, he should have become the holder for valuable consideration. He should not have sufficient cause to believe that any defect existed in the title of the party from whom he received it. So very, very important. Now, privilege of holder in due course we'll see. Before that, let's go back. I'm skipping a lot now. That skipped part I will go. Inchoate. Inchoate instrument means an instrument that is incomplete in certain respects. Now, the person signing and delivering the inchoate instrument is liable both to a holder and holder in due course. Inchoate instrument, thank you, Mr. Keshavji. Inchoate instrument means an instrument that is incomplete. Simple, blank check. You don't write the name of the payee. You don't write the date. You don't write the amount. But you should sign. That day, one lady, she was telling very emotionally, she was telling something, I want to give the check to the organization. I'm very blah, blah. I said, look here, you don't write anything, but put the sign. That is very important. The check can be blank in all respects. She told, I'm going to give you a blank check. I said, Amma, give you a blank check. I'll happy to take it. But please sign the check and give it, because sign without that, nothing can happen. The sign should be there. Okay. Other than sign, there may be something else which is not mentioned. Okay. Name of the payee, amount, something, date. Obviously, these are the things. But again, remember, if figures are written and if figures are there and number is not there, figures will control. If both figures are there, numbers are there, they are different, figures will control. You'll be studying that in General Classes Act. Whatever is mentioned in words will be valid and will be accepted rather than what is given in numbers. Words will have more value than numbers. The simple logic is to write the words, I need to apply my mind. Whereas number, there can be a mistake. So the person signing and delivering the inchoate instrument. See, now comes the point. My friend Keshav Thakur, I think, gave that example of up to 15,000. I don't know, Mayur Gupta, I think. Mayur Gupta gave up to 15,000. No, you are signing it in blank. You are writing in the check not above 15,000. But then you are giving it to the holder. Holder is entitled to only 5,000. Holder is entitled only to 5,000. Are you able to understand? It's blank. Now, the holder who got the check gives it to a holder in due course. Now, the holder in due course writes 10,000. Now, the holder of such an instrument cannot recover the amount in excess of the amount intended to be paid by the signer. So, between the signer and the holder, the understanding is 5,000. So, the holder cannot recover more than the amount intended. But the holder in due course can recover any amount on such instrument, provided it is covered by the stamp. See, in your example, that check cannot be paid above 15,000. So, up to 15,000 holder in due course can put. So, if he puts 15,000, then even down the signer cannot say, no, my understanding was only 5,000. That was your understanding. Who told you to give blank check, man? You would have written 5,000. Okay, since you gave a blank check to the holder in due course, you will be due for any amount up to the limit specified. Whereas to the holder, you are only liable to the amount you agreed or intended to be paid. That is why I have to teach you holder in due course before coming here. Ambiguous instrument, where an instrument may be construed either as a promissory note or bill of exchange. For example, I am the drawer. Okay, I am also the payee. And I am drawing it on somebody. He accepts it. It becomes a promissory note. Yeah. You can either treat it as a promissory note or as a bill of exchange. If the amount, see, this is given in section 18 also. If the amount undertaken or ordered to be paid is stated differently in words, in figures and in words, the amount stated in words shall be the amount undertaken or ordered to be paid. Please remember this. See, these are all small pieces of information that may be interesting, useful later on in your life. Acceptance not there in your syllabus. Okay. Holder in due course covered. Now we go to privilege of a holder in due course. Let us see some few and then we can move on and see the balance also. So, privilege of a holder in due course. We already saw that. Just now we saw. The signer of an inchoate instrument shall be liable in the capacity in which he signed to the holder in due course for any amount specified, provided the stamp is sufficient. We just saw that. That is one of the privileges of a holder in due course. Every prior party to a negotiable instrument is liable to a holder in due course until the instrument is duly satisfied. Now, who are all the prior parties? Every prior party. See, think about it. Suppose payee NRC 1 has obtained that instrument by misrepresentation. Now, NRC 1 is a holder but not a holder in due course. He gives it to NRC 2. Who receives it for consideration in good faith, etc., etc.? He is a holder in due course. Then NRC 2 can claim from all the prior parties. Even though NRC 1 is a fraud, payee cannot say to NRC 2, I'm not liable. Drawee cannot say. He can be presented to the drawee. If the drawee does not pay, then the NRC 2 can go to the payee, prior party, and the drawer. So all prior parties are liable to the holder in due course. Okay. Every prior party is liable to a holder in due course. Suppose a bill of exchange is drawn on a fictitious name and payable to the drawer's order. So I am drawing it on somebody and saying, I am writing it to Mukesh. There is no Mukesh. I am writing it to Mukesh and signing as Rakesh. No, Rakesh, I am Rakesh. Drawer is there, but there is no Mukesh. Fictitious person. Okay. Now, that is, it's drawn on a fictitious name. Okay, and payable to the drawer's order. And that in that fictitious name, I'm signing Mukesh like that. And I'm then endorsing it to somebody and giving it. Now, an acceptor of the bill of exchange is not relieved from liability to any holder in due course, claiming under an endorsement by the same hand as the drawer's signature. In other words, the acceptor cannot allege that the name was fictitious. Once he has accepted it, it is gone. It was drawn on Mukesh. You are not Mukesh, but you signed it. Liable to the holder in due course. Okay. Suppose an instrument is negotiated to a holder in due course. The other parties to the instrument cannot escape liability on the ground that the instrument was given conditionally or for a special purpose only. See, many times, promissory notes are delivered as collateral security, conditionally as a security. Now, when you go to court, one of the arguments we will put forth is that promissory note was never intended to be presented. It was only given as a collateral security. Like that. There was no consideration, like something like that. Now, that argument will fail before a holder in due course. To the holder in due course, you cannot say it was delivered conditionally. Maybe it was delivered conditionally to the maker. But if I am a holder in due course, I am getting better title than the maker. See, the holder in due course gets better title than the party from whom he receives it. This is one of the real privileges of holder. Holder in due course gets better title to the instrument than the person from whom he received it. Right? Now, friends, we have covered good ground. So we shall stop here. Tomorrow, inshallah, we will take it up. Even if we have to go a little late, till 8:45, we will go. And we will finish the topic tomorrow, inshallah. Okay? Thank you for your patient and supportive listening, and for your extraordinarily good questions, which are very powerful. Keep them coming. I know it's a little confusing topic, but I hope to an extent it is now clearer. Read a little more. If you have further doubts, you ask me tomorrow. I will answer it. Definitely one question is going to come out of this. So 1 or 2 questions. Enjoy yourself. Okay? Thank you very much. Bye. Sir.